big changes for Maruti Suzuki back in India as well. But so far, no confirmation either from Volkswagen or Suzuki on that story. On to the newsmaker of the day. The Fortis Group is on a mission to consolidate its domestic and global operations. Fortis Healthcare India announced a deal to acquire Fortis Healthcare International from R8C Financial Services, a firm owned by Fortis promoters, the Singh brothers. The combined entity will have $1 billion in revenues and operations spread across 10 countries. Now, to understand the rationale behind the deal, we're joined by Malvinder and Shivinder Singh. Gentlemen, many thanks for joining us on India Business Hour. Malvinder, let me start by asking you, when you decided to expand internationally a year ago, you decided to do it through Fortis Global, which is a promoter-driven company, so that you wouldn't leverage the balance sheet and put Fortis Healthcare shareholders at risk. What has changed in the past 1.5 years for you to make this decision of folding Fortis Global into Fortis Healthcare?
I think a lot of things have changed. The business has grown very substantially. A year and a half ago, the Indian business to what it was then and what it is now is a huge difference. Indian business today has 66 hospitals. It is a leading healthcare company. It is an integrated healthcare company moving beyond hospitals to having hospitals, daycare specialty centers, and the largest pathology business. At the same point in time, we have very aggressively moved to create a very substantial multi-country, multi-vertical healthcare business internationally. And when we look at India and international, today they are of the same size. Internationally, we've entered 9 countries. We are there in multiple verticals. We have a run rate of $500 million in revenues, and we have a very strong presence and a leading presence across many markets. This is actually the perfect time, actually, the perfect time to put the Indian and the international business together to create a leading healthcare delivery services business in the Asian Pacific market. And the synergies, the opportunities.
Okay, so you believe that this is the perfect time to actually fold these two entities together. But Malav, you know, a year and a half ago, you also said that you would like to list Fortis Global in the international markets, perhaps Singapore. Now, Fortis Healthcare and Fortis Global become one entity. Fortis Healthcare is listed in India. We do not have dual listing. What then happens to your international listing plans, and why did you deviate from your earlier stance of trying to list Fortis Global internationally?
Look, listings are a way of raising money. For us, there is huge opportunity in Asia Pacific. There's a huge opportunity in the Indian market. When you combine the two businesses, the medical capability, the human talent from a managerial perspective and the infrastructure perspective and the verticals which we put together is a story which is a fantastic story. And today in this market space, only Fortis Healthcare has this story. The ability to grow and add value from this is phenomenal. This does not preclude various entities of ours getting listed in multiple markets to raise capital. We will raise capital based on opportunity, based on need, in terms of what we need, when we need, and how we need to do it. I have not said yes, and I haven't said no. At the right time, we will do it.
Okay, you haven't said yes, nor have you said no as far as an international listing is concerned. But Shivinder, let me come to you now, because you guys have articulated spending about $1 billion in capex over the next 3 years, and you're also saying that now the combined strength of Fortis Global and Fortis Healthcare will give you better leverage as far as the balance sheet is concerned. What then happens to Fortis Healthcare's balance sheet? What kind of gearing do you currently have? What is the comfortable debt equity ratio if you do decide to take on debt?
Well, I think if you look at it currently, we are looking at a debt equity ratio that we've come through up to 1:1 that we've announced before as well. So we have enough scope to gear up today with the Fortis India balance sheet, and if you add global to that, obviously you have much more opportunity there. So really there are 3-4 ways for us that we can look at gearing up for capital. One is obviously gearing within the company. The other is the fact that most of our businesses now are actually plowing by cash profit, so we can plow those back into the business. We have a very strong balance sheet that we can leverage, and we've talked about different examples and options in that case where we can actually leverage our balance sheet, as also the fact that we can go for equity raising. But to the earlier point that you asked, Malvinder, let me just change the construct and explain it in a different manner. As we announced earlier today, we are currently present now with both the companies coming together in 8 different verticals in the healthcare space. And these 8 different verticals are there in 10 different countries, some present in some markets. So if you think of it in a broad platform, what we're trying to do is go into 8 or 10 verticals in the healthcare space and go to 10, 15 international markets. So if you just make that matrix and think about populating each of those areas, that's really the logic of why it needs to come together and what the opportunities lie. And technically speaking, you can list a vertical, you can list a country, and you can do a mix of both. So therefore, funding, fundraising, market opportunities are going to be tremendous going forward. So it's not limited to a global or a SRL or anything like that. Each of these combinations can work for us depending on what the need and what the market opportunity looks like.
Malvinder, let me ask you about valuation, because you haven't arrived at the valuation now. I understand that an independent valuer has been appointed or will be appointed, and you will arrive at a valuation closer to November or December. But given the fact that this is the same promoters and this is you need to establish arm's length, would it not have been more transparent if you actually announced the valuation while you announced this decision?
I think clearly from our viewpoint, what we've done today is have a clear decision in terms of intent and in principle approval, and for the two entities to come together. This is clearly based on the valuation that needs to happen. We did not want to delay and wait for communicating the decision that we're going to put it together, because there's a lot of work and a lot of growth that's happening. So clearly, by being able to start putting many things together from an operational efficiency, a synergy perspective, a growth perspective, we want to move as quickly as possible, having taken that decision. Because of the governance and because of a related party transaction, they very clearly upfront said that there is going to be a third party valuer. There is an independent committee of the board that has been set up who will work on this, and then the board will take a final call on the value. So this is a very transparent, it's a very open process, and we as related parties and as conflicted parties being on board are not participating on this process. So from a governance perspective, we are very strong, very clear, and done it absolutely correctly. At the same point in time, the intent of what we want to do, we did not want to hold back and share the message with all our stakeholders, so we're able to bring alignment and move forward.
Okay, Shivinder, I just want to pick up on a comment that you made in an earlier interview a couple of weeks ago. And that comment raised a few eyebrows and concerns as well. You said, and at least that was the headline, that our intention is not to be in healthcare forever. Was that misconstrued? What should we make sense of that? How should we make sense of that?
Well, I think it was certainly misconstrued. The question came in light of the fact that we stepped off the board of Religare last year. And the comment I made was that we'd like to spend our time in building and creating capability and value that nobody else can do. And in the context of that if somebody else, and once the business gets to a certain size and scale, and somebody can do that job, that we'd like to move on to things that other people cannot do. We would like to use our entrepreneurial time and capability in creating value in business, not running day-to-day operations. So in the same context, I also mentioned that I'd like to look at retiring. I'd given a time frame for a few years, but like I've said before, Malvinder doesn't like that word, and he's obviously made it happen. So I have technically retired from the Indian business, and now I'm going to be working with Malvinder on the global business. So really the context is that we'd like to do stuff to get it to a certain size, set it up, put it together, and then let professional executives who can do a much better job in creating value and extracting value from that business do that, and we go on to doing stuff that others can't really do, and put that risk and challenge in decision making, in entrepreneurial spirits, into new businesses. So we are actually doing exactly what was misconstrued a month ago.
All right, Shivinder, Malvinder, we will leave you there. Appreciate you joining us here on India Business Hour, and we'll check back with you when that valuation is arrived at. Thanks very much for joining us on India Business Hour.